Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performers for the week that was, and of course, our hottest stock picks for the week to come. I want to welcome everyone over to 2021. And before I go any further, please allow me to introduce you to my investment panel and resident experts in the market, the ever wonderful Caroline Wong. Filling in for the ever stoic Gabriel Ryan, we've got the ever charismatic Peter Kasser. And of course, our senior trader, Linson Cow. Guys, welcome to 2021. Did everyone have a good Christmas, New Year break?
Yes, very low key. It was very nice.
Very good. Weather was all nice. No one was affected too much by lockdowns.
No, it was all right.
Very good. Well, let's get things started off with a little bit of macroeconomic data. Now, I thought to myself as I was sitting on Christmas Day and I was sort of thinking about things, I was thinking, right, this is going to be a year where we're probably not going to talk about American politics in the realm of Trump. I thought, yeah, we're probably not going to talk about Trump this much. What are we going to talk about? However, one weekend, and we've got people storming the, Capitol. We've got a whole lot of stuff that's going on. Mike Pence has gone against him. All these different things have been sort of happening. I'm going to flick over to Linson because I know you've been keeping very much abreast with it. And I want to start off with where we left off, which was last year. And everything seemed to be going into a relatively smooth transition out. And then what happened this week?
Sure. I mean, there's so much to unpack here. So at the end of last year, pretty much everyone had settled on who had actually won the election, at least the presidency. But the big thing that was still to come were the Georgia Senate runoffs. So they had to have these runoffs because no single candidate managed to crack that 50% mark.
And no one did it, but they hadn't been announced though, right? Like, sorry, I'm just backtracking.
Sure.
It hadn't been announced yet. Like, it was sort of, hadn't conceded.
We're talking about they had not been certified, but all the electoral colleges, or at least more than 270 of them, had been confirmed. Okay. So it really was just a formality. But they were waiting to find out. The Senate races were particularly important this time in Georgia because the score was 50-48 to the Republicans. If the Democrats could, against the odds, get those last two spots, the tie-breaking vote goes to the vice president, which is going to be Kamala Harris. So they would then effectively control the Senate as well. So they were effectively coin tosses.
Yes, right.
And I don't want to get into too much math, but if you have two coin tosses and you need to win both, that's 25%. So the odds were against the Democrats winning, but against the odds, they actually did sneak in. And I think we looked at the numbers the other day. It was less than 100,000 in both races. So it was really close.
But it was a blue sweep.
Okay. Yeah, it is a blue sweep now.
Okay. And do you think that, because that's not that common. I mean, it's not really that common to have a big sweep over things. Is that probably to do with sort of Trump's actions? Do you think he's turned people off or away from his loyalty?
It's so hard to know for sure. I mean, I think when Trump first got in, correct me if I'm wrong, I think in 2016, the Republicans did have the clean sweep. And then the Democrats turned the House in 2018. I think that's how it went. Anyway, we'll move on from that. But it may not have helped their cause because I believe the two Georgian senators were Republicans and they both lost their seats. So it probably didn't help that Trump said and did the things that he did leading up to that race.
I think we can go forever and ever and ever on all the things that Donald Trump has done in his term as president that haven't helped his cause. We can also talk about all the things he has done that has helped his cause, none least of which has actually been the performance of the stock market. But the things that he's done wrong, sort of recently he's got these people, these protesters. Did he say go and protest at Capitol? What did he say? Did he actually?
Yeah, so I haven't. Correct me if I'm wrong again, but I believe what he said was we're going to have this protest. He didn't say anything about it turning violent or anything like that. They had the protest and he had a few like warm-up acts. I think Rudy Giuliani got up and spoke. One of his sons might have. And then he spoke for about an hour.
Yes, okay.
And then he said, now we're going to march down Pennsylvania Avenue, I think is the name of it. He said march. He didn't say let's storm anything.
Okay, right.
And he said, I'll be right there with you. I think he may have just gone home after that. I'm pretty sure he did not go with them.
Yeah.
And
of course, everything from there kind of heated up a little bit.
yeah.
And then Biden came out and said he's imploring Trump, mate, you've got to send people home, tell them all to go. And he did. He came out with quite a candid speech, okay, about how he was renouncing and how he was going to get a nice, smooth movement away. Is that correct?
Yeah, so I think in the minutes after Biden first called for him to go on TV and say, hey, tell these guys to stop it, he did release something. I don't know if it was Twitter or some other service, but it wasn't that official. But he did his usual thing where he said, go home, but we still love you. It was stolen from me, but please don't do any more. Like he sort of kept doing the back and forth. But today he gave a far more measured down the line, look, we don't condone this. You're going to be prosecuted. Like there's going to be a smooth transition.
And there's some weird things that was in that statement, wasn't he? First and foremost, he said that as soon as the rioters came in, he got the National Guard out and said, did that. I understand that was actually Pence that did that.
Yeah, so again, we can only go off what the media reports because we have no idea. But I had heard yesterday that it was actually Pence who called in the National Guard. And then, I think it was only an hour ago, we both heard that the sound clip of Trump with his very down the line statement, but he said that he immediately called in the National Guard, which I don't know.
Yeah. I think it's an interesting thing because Pence is going to be in a very tricky situation right now. Like there's obviously very clear rumors that he's going to run. He's doing some good speeches. He's got 2024. Looks like he might potentially have a stab at running for office. He's got to be very diplomatic. But there's also some other people that said that if they do evoke the 25th. Right? Or the
25th Amendment, I think it was.
And get him out of office early, Trump, that Pence would actually step in for the last 13 days of the presidency. Is that...
yeah, I guess that would make sense. I didn't even think about what would happen if they did it. And it is amazing that they're even thinking of doing it, given they could just wait 2 weeks and he's out anyway.
I think they're so scared about what he's going to do.
Exactly, yeah. I mean, that's just an amazing set of circumstances, I think.
I heard all sorts of... I think I was talking, I heard a whole lot of weird stuff about people saying that he could pardon himself and he could exonerate himself and all these things like that. All hearsay. Let's talk about what we're really talking about, and that is what the markets and how the markets have taken it, because that's what investors really want to know about. I'm going to turn over to our new addition for 1 week and 1 week only, Mr. Peter Casa.
It's good to be here.
Okay. Unfortunately, the ever stoic Gabe is down with a slight head cold.
Yes, that's
so
right.
we're keeping him off for safety and health, and you're stepping in. Last minute stepped up, but you keep a very close eye on what's happening in the market, and you've been looking at the markets over the past month broadly. What have they been doing?
Yeah, look, it's very interesting. Obviously, as investors, we understand the market really thrives off confidence and certainty. So even though there has been a little bit of turmoil as of late with, I guess, the drama and the heat between the Republicans and the Democrats, I think it is very positive that we have finally got a result, both in the House and the Senate. Now, obviously, as it is a blue sweep, what that really does mean for the US, the markets have rallied, all major indexes reaching all-time highs as of yesterday morning, which is very positive news.
All-time highs yesterday, yeah?
Yes, that's right. So that's really coming off the back of, I guess, consumer and investor confidence, really with the intention and the hope, I should say, that stimulus packages are coming out.
Well, that's the other thing that I was just talking about. I was talking to Mr. Carr about this the other day. The blue wave they are very keen on physical stimulus, printing money. They have said that. They would do a lot of that. So
it really provides minimal resistance with getting anything through the process of getting the bill passed and whatnot. So it obviously is looking really positive for the markets. They've rallied, and then carrying that over to our market. What does that mean? Obviously, the US being a leading economy, we understand that there'll be a bit of a flow-on effect there. So that'll obviously carry on across to our market. And it has done, obviously, with iron ore spiking based off, again, infrastructure spending looking to increase over in the US. So, yeah, very optimistic about the market from here.
Yeah, absolutely. I mean, everything seems to be sort of moving in the right direction. However, things that probably aren't moving so much in the right direction is I want to go over to Caroline and just want to talk a little bit about the euro, the yen, the dollars, how they're sort of going, and sort of what the central banks in general seem to be doing with it at the moment.
You put it right exactly. So the dollar index isn't looking too good. If we look at the chart of the Bloomberg Dollar Spot Index, you can see that the dollar is trading at the lowest level since 2018. So a falling dollar means that the yen and euro are at levels which makes it harder for central bank to actually reach their targets. So if we quickly look at the euros, the shared currency is heading towards $1.25 as represented by the bold line. This is a level that it hasn't consistently traded above in the past 6 years. But more importantly, what we have to know that it is not a euro strength, but more of a dollar weakness. If we look at the yen, it is close to hitting a 9-month high, 103, with expectations that it could break past 100 this year. But more importantly, despite the strength of this currency, the Bank of Japan has suppressed the yen by driving the domestic use so low such that investors can actually look to overseas to invest.
I understand. Now, they couldn't do too much. I know the Japanese couldn't really cut interest rates much lower. They were very negative. What were Linson? What were they on their?
I mean, they've been targeting, I think, 10-year bond yields. They've been targeting zero. The official rate is a negative number, and it's been that way since well before the pandemic. They've been trying for a long time to spark inflation unsuccessfully over in Japan.
Okay, so I mean, things aren't great around the world, but the markets are rallying. What is the Japanese stock market is on all-time highs, surely?
Contrary to expectations, it hasn't been doing too well this week. It's been recording a few red candlesticks the past week.
But it is high, yes?
Yes.
They're well above their pre-pandemic high.
Yeah,
I think even more so
that's what
than
I mean.
the US.
That's what I mean.
Yeah.
So pre-pandemic high, well above that. We would say in the top sort of 5% of their pre. New Zealand's on an all-time high. We are not, but America is. Okay, I think this is huge. There's a lot of really good sort of movements in the markets towards the north. Is that because can that be put down just because we've got COVID coming out and because everything's sort of moving in the right direction with that? What do you think, Mr. Kasser?
I think it's very interesting. Obviously, with COVID coming across the board, it obviously has a huge impact on everything. But I guess in terms of our market, I think there is still room to grow. Obviously, with all these other major indices reaching all-time highs, the US, like all the other ones you listed as well, there is still room. I'm very optimistic about what the market looks to do, obviously. And I think our governments locally, obviously state governments are the ones that really have the jurisdiction over the restrictions for COVID, which is really in turn the reason as behind maybe economic growth isn't where we'd like it.
Yeah.
I think they're handling it really effectively, really well.
Yeah.
And Victoria maybe not so well, but New South Wales locally, I think we've done pretty well in keeping wraps. So yeah, looking optimistic for
And I mean, let's take a look at, because last time we spoke, okay, we were all gearing up for a nice, easy Christmas, and then of course the Northern Beaches cluster kind of spiked. Everything went back into lockdown. Then they sort of gave the 2 lockdowns. Everything eased off. I hear now that Queensland has just been put into a hard lockdown for 3 days. Is that correct?
As of 6 p.m. tonight, yes.
As of 6 p.m. tonight. So that's less than ideal. So it seems to be that it's kind of going around a little bit. Are we in danger of having everything resurge back up again? Or
I guess it just it puts the ball in the court of the state governments. I think they are doing a good job. Like New South Wales, I believe we had no recorded cases yesterday. Today, I think was 0 again, which is very positive news, considering that not even maybe 7 days ago, just over, we were seeing spikes in the Northern Beaches, which were pretty concerning nationwide, but I think they have done a very good job,
Yeah, so I mean, I think it's going to, potentially we could be right, but either way, the market seems to be brushing off most of these issues as a sort of a bit of an old news. Is that correct?
Yeah, well, look, the market's growing. Obviously, we've seen good growth, especially at the start of the year. And I think it really just comes down to the sectors that are seeing majority of the gain, which isn't really directly impacted by COVID, and investors are finding confidence elsewhere. So I think it is very positive.
Well, there you go. Ladies and gentlemen, we're going to take a short break. And if you have any questions, please feel free to take a video and email it through to info@kosec.com.au. Now, anyone who does this will receive a copy of our book, Stock Market Success, Retailing in Dymocks for $39.95, or our magazine, selling in news agencies Australia-wide for $19.95. We'll be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael Kodari forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael Kodari creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
welcome back. Let's talk about currencies and commodities, all things that shine, sparkle, fold, and make the world go around. But before we go any further, we have had a viewer video question. Let's go to that right now.
Hey guys, what's your market outlook for 2021 and which gold players do you think are going to outperform? Thanks.
Thank you very much, Jarrett. So, there we go. Which sectors do we think are going to perform well? Now, I think that's probably best left to be answered in the sort of one of the later segments of the show where we talk about hot opportunities, etc. and stuff like that. But let's talk about Saracen. Okay, I'm going to turn over to Linson. Okay, and I know you've got a little bit of an interesting thing about gold because Saracen's one of the things that I think would do quite well in that certain circumstances. But talk to me about what gold is looking like and how we think there might be some opportunities in that space.
Okay, well, let's start with a chart, which I always like. So with the global easing in 2020, so the point of this chart is not as a geography test. The idea is there's just a lot of pink, which just illustrates that most countries in the world cut interest rates last year. Not a surprise given the pandemic. So, I don't know how many times I said this now, but gold generally moves for three reasons. One of them is a safe haven status that's become less important nowadays. Second one is inversely with the US dollar. So with the dollar falling, should see gold rising as well. The third one is with interest rates so low, if the market believes that inflation expectations, or they have inflation expectations for the medium to long term, that means real yields are lower, funds are going to have to flow into something else. And gold could be one of those assets. So medium term, I think we're all relatively bullish.
I mean, we're playing a guessing game here now, really, aren't we? I mean, and this is always a fun thing for any type of people that work in an advisory service about guessing what's going to happen next. But we all knew that gold, and I don't know if there's anyone in this room that would say that gold is not a good asset to hold with the current climate. However, it has certainly been hammered lately and had a big pullback. Is it the right time to be getting into it, or do you think waiting? And just going back to Jared's question,
Sure.
Could he save himself a bit of heartbreak or a little bit of wallet ache when it comes to that by getting in a little bit later?
Unfortunately, I don't have a definitive answer. I think it's more maybe because it has trended up over the period since our last podcast, about 3 weeks.
Yes.
Is it too soon? It also might be a little bit too soon. However, gun to your head, if someone said you have to get into a gold player now on the ASX,
yes,
Saracen, SAR, not a bad choice as well. So I think you always mentioned that Saracen has relatively low levels of debt. Yes. I think they were zero debt for a while.
I believe it's zero debt.
Okay, that might have changed in the past year, but I don't know for sure. But let's go with zero debt. Also, they've had an announcement at the end of last year that they're going to be merging with Northern Star Resources, and the market received that very positively. So generally, when you have a merger, you'll see one stock go up and one stock go down. Generally, it's the target that goes up and the bidder goes down. However, in this case, they actually both went up. It was a merger of equals, the way they phrased it. And the market feels that they're unlocking a lot of synergies from that. So,
and this isn't a small merger, by the way, just for those. Northern Star is a big gold player. And so Saracen's they are definitely some of the largest gold players in Australia. So this is a big deal when they're coming together.
Exactly. So if and when it's confirmed, and I believe it's going to be this month or maybe next month, it'll be finalized. They're going to be in the top 10 global gold producers.
Wow, that's big. It's quite big. I'm going to ask that question. This is probably a very tricky question. If anyone else knows the answer to it, I'm very happy to hear from you. But why would you buy Saracen as opposed to Northern Star if they're going to merge? Why wouldn't you just buy Northern Star as opposed to Saracen? Is there any benefit to buying either one?
I guess.
Or are we looking short term? Maybe Jared is looking short. Maybe he is looking short term.
I guess it's kind of the tiebreaker because you're right. In the end, Saracen will be Northern Star. They're going to call the new company Northern Star, and I think they're going to retain the same ticker NST.
Okay.
But if you look at it on a technical basis, if you look at the charts of the two, then Saracen has consistently trended down over the months leading up to this one. However, it has formed one higher low and one higher high, and it's poking just above its 200-day moving average. Okay. So for that reason, if you wanted to pick one over the other, that would be the tiebreaker for me. With Saracen.
Okay. So you go with Saracen. So that would be the answer for Jared, would be Saracen. And longer term, medium to longer term, gold not looking too bad, but potentially maybe just urging a bit of caution right now. Would that be a safe assumption?
it's not a terrible idea, but higher upside and lower risk opportunities are out there.
Keeping in mind, at the moment, and it's all about opportunity. I mean, everything was all about what's the best opportunity. An opportunity that travels sideways or an opportunity that goes up. fairly clear at the moment. There is opportunities that are going up 10% in a day. You know, Nick Scali, for instance, I know that's one that we've had some clients involved in. Nick Scali, 10% in a day. Nickel mines, like there's stocks that aren't even traveling a little bit sideways. There's things that are going up. So that'd be probably the consideration maybe for Jared. Does he want to hold a business that might go down or travel sideways for a bit with the eventual goal of going up, or would we rather just wait a little bit longer and maybe get in? Would that be a fair kind of
I mean,
call?
we can't see the rest of his portfolio, so maybe a gold player fits in very well with the rest of what he's holding.
Absolutely. Obviously, it is all general advice, doesn't take into account personal circumstances. Let's jump over to Mr. Casa, because I know you keep a very, very close eye on oil.
I do.
It's something that you've got a bit of a passion on. And I know that you were very aware of what's happening in the OPEC cuts, etc., in that whole space. Care to share your thoughts on how that's going?
Yeah, so obviously oil is looking quite attractive at the moment. At the start of the week, it was quite slow to make any major movements because we had the OPEC meeting scheduled for Monday.
Yes.
There was a slight delay. They're getting pushed back till Tuesday, obviously creating a little bit of uncertainty there for the investors that do like to hold the commodity. But then moving on, they obviously came to an agreement. Saudi Arabia is going to cut 1 million barrels per day.
Yes.
So from that agreement, we actually saw a 5% hike in the price of the commodity. If we want to have a look at the chart, you'll see that we did get the commodity reaching $50 per barrel through the WTI. So obviously that sort of elasticity is very important.
How far off pre-pandemic is that?
Look, we reached high with, I believe it was upwards of $70 per barrel.
Yeah,
Correct me if I'm wrong.
somewhere in
So
that vicinity.
look, it's heading in the right direction. It's had momentum for a while. Obviously, with the global economy looking to restart, it could be a very promising space to be involved
You're
in.
very bullish on everything.
I
I'm
am.
back up again.
No, look, I'm very optimistic. in
Yeah,
that
you're
stuff.
very, very optimistic.
There's always opportunities if you look in the right place.
Because we've been talking about gold and oil. I mean, for us, I suppose one of the big things is about marrying risk versus reward and all those types of things. I know we are ones that don't like to talk about trying to get things right at the very bottom in case they continue to fall. Is this the turnaround? Do you think it from here is that and now it's a bit more safer?
Well, look, it has been rallying pretty positively for a while now. This isn't any sort of major change in momentum, but I think, it could look very positive. I think the major catalyst for moving forward, though, is just global economic rebirth or reopening.
Yes.
So really important to keep an eye on, I guess, COVID worldwide to make sure, obviously, manufacturing starts, production restarts again. Obviously, oil is going to be a huge.
It's going to be the planes versus Elon Musk.
Exactly.
Isn't it?
It's a bit of a race.
Elon Musk is trying to get everything electric, and he's like, right, no more oil, and everyone else is like, I want to go flying, I want to go on holiday to the Maldives or whatever.
Exactly.
It's
definitely something to keep an eye on. that's for sure.
Keep an eye on. All right. Well, another thing that I've been keeping an eye on is ore or iron ore. As we do that, I'm going to turn over. It's terrible, right? It's absolutely dreadful.
It's the start of the year.
It's the start of the year. You guys will excuse me on that one. Don't worry. There's more to come. I can assure you of that. I'm going to turn over to Caroline. You've been watching that thing go absolutely gangbusters. Talk to us about that. What are you seeing? Because you picked this a while ago. Probably about 4 or 5 weeks ago, 4 or 5 podcasts ago, you said, I'm a double bull all the way. You actually said that. You said, I'm a double bull on iron ore.
Yeah, I remember your eyes there.
Yeah, and I was just like, yeah, is that right? Okay, and it just kept going up and up and up and up and up. It's absolutely unbelievable. It's got to be one of the picks at KOSEC. It's got to be one of the picks, one of the best picks we've seen. Talk to us about what's happening for it.
So since the last podcast, it actually pulled back a little at the tail end of December. If we look at the chart.
When you say pulled back a little, what do you mean by that?
It did have 2 red solid candlesticks. If you look at the chart, they'll be pulled up. But since the start of the week, it's very, very bullish. 5 consecutive green candlesticks. Currently trading at $170 a ton, reaching the top of the Donchian channel. But the rally has more profound impacts for the local miners here in Australia. So we look at the chart detailing the comparative performance. The XJO actually surged 11% from July 2020 to January 2021. However, our local miners severely outperformed this performance.
So the market from July 2020 till January now, okay, we did 11% gain. Okay, keeping in mind that 11% was only barely got us back to break even over on the year of last year. And you were saying that iron ore miners like those ones.
Yeah, so if we look at the chart, the dark blue line shows the performance of Fortescue Metals. So they have actually done 75% during the same period. But specifically in the month of December, Fortescue Metals, its share price surged 45%.
Wow, that's incredible. What a movement towards the north. And I mean, that's probably all down to yourself. Can it keep going? Is this the end of the road for it, or is it going to keep running from here? Or are you still a double bull, or are you now just a single bull?
Single bull.
Are you now a single bull? So we're moving down. Next week, if it goes down a little bit, we'll move to a little bit of a calf. Is that right? A little bit of a smaller cow.
The next
We're
downgrade.
going to go down until we get down to your pigeon. Don't like it at all. Is that right?
Possibly.
Very good, very good. So that's commodities and currencies and the events that shape them. Now, are you a bull or a bear? Or maybe even a double bull? Let us know. Our phone lines are now open. In the meantime, we're going to take a quick break. And when we get back, we're going to take a look at the best and worst performers on the Australian market this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Let's move on to our next section now and have a look at what the best and worst performers on the week were. We're going to go straight over to Caroline because I know you've been looking quite closely at the sectors and how everything should have been going on that end. Have you got a bit of a graph for us? Why don't you have a chat about that?
Sure. So we started off on a very strong foothold on Monday, possibly the strongest in 20 years. And by Thursday, we saw that materials was the best performing sector, surging 1.8%. A lot of the heavy lifting was done by BHP and Rio, both of which sought to record highs yesterday. But unlike the usual narrative, another reason behind the rally is the surge in copper prices, both of which BHP and Rio are involved in. So copper is now trading above $8,000, and this is 43% above its lows hit in March 2020.
Okay, so materials space that you think could what's something that's not doing too well at the moment?
So from the graph, you could clearly see that it's IT. It's down 1.5% from between Monday to Thursday. You could say that it's the rally out of growth to value stock, and also possibly fears that when a new administration comes in, there will be more scrutiny on big tech.
Okay, perfect. So, I mean, we'll talk about that at a later stage, but let's talk about materials. And we'll bump over to Mr. Casa because you spoke about oil before in the past. And,
Yeah.
I mean, what are you looking at as, because this is only useful if we can identify stocks that could actually do well in this. I mean, stocks that could go down because of that could be the big tech players, stocks that could go up in the oil sector or the materials space, obviously Fortescue Metal being one. What are your oil stocks that you've been looking at?
Yeah, so obviously energy performed very well through the week. I believe it was the second best performing sector. So WTI and oil obviously being a major driver for the space all in all. We did see WTI gain around 4.3%. Now, carrying that back off the OPEC meeting, obviously the huge catalyst for the week for the obviously the commodity. In terms of stocks, we saw oil surge gaining around 16.5% for the week. So very positive results there. Beach Energy as well, just under 7%, and Woodside sitting at 9% growth for the week. So all looking pretty promising.
Whenever I think about buying stocks in the commodity space, I always think about two things, or I always talk to clients about two things. One is what the underlying commodity price is, because if the price that they're selling goes up, obviously the stock can make more money. But it doesn't matter if their operating procedures, if their management, if their corporate governance is not good. If they're not good companies, it doesn't matter how expensive they're selling it for. Do you think that by having stocks, I know Oil Search and Beach are both in the ASX 200, is that something that you think would be as wise to kind of mitigate that risk? Is there a factor that maybe because they're in the 200, they're a little bit more well run?
Yeah, absolutely. Great question. Look, with any business that you do invest into, you always have to look to a core of the company's operations. So you want to look at fundamental indicators. So much like what we look at when we're buying a client a stock, return on equity, revenue, earnings, cash flow, operating margin, maintaining some consistent results through there is very important. Now, also, you do obviously have to understand the elasticity there between the commodity and the actual business's, I guess, growth in the sense. It is quite strong when it comes to commodities and the business.
Yes.
So I feel like if you have checked the fundamentals, you do still approach the stocks as just a typical business you would invest into, looking at fundamentals, your valuations, getting everything in line there. And then obviously basing the judgment of the major movements through the commodity itself, I think, you can make some good returns, and it's a great way to mitigate your risk as well.
I remember 2017, I remember looking at how gold went up 1%, then gold miners got 4 or 5%. I'm sure everyone kind of saw that. If oil dropped 2%, then everything would go down 10%. I feel like that's getting less and less now. I think the volatile movements, so I think it's getting a little bit more smoothed out. Would that be a safer? What are you finding?
Yeah. Like I think everything's sort of leveling out at this stage that we're at now, and it's just one of those things you have to keep a constant monitoring of what the market's doing, the commodity markets as well.
Yeah, perfect. So we've spoken about what's doing well. Let's talk about what's not doing so well. Linson Cow. I know you've been keeping a very close eye on what's happening overseas with some of their big tech names over there. We did see a sort of a sector or a reopening rotation into more cyclicals, etc., more value stocks. The AFR has been talking a lot about the top cyclical stocks, the top value stocks that might be undervalued. What are your thoughts? Is tech no longer the place to be?
I'm going to start with a yes and no. I will get back to that question. Let's go to a chart first, though. It's a little bit more general. It's Australia-New Zealand unsolicited takeovers. So this sort of reiterates, I think, Peter's bullishness from earlier as well. So you can see here, so an unsolicited takeover is like a hostile takeover. And you can see here that it reached a high, what's that, like a 20-year high for the quarter in the fourth quarter of 2020. All that's reflecting is what Peter mentioned earlier, that a lot of the other markets have reached their pre-pandemic highs. However, Australia is still below.
Yes.
Right. So there are other people who are clearly bullish as well. I mean, obviously, all of these bidders think that there is value in the Australian market and the New Zealand market as well. I suspect most of those are coming from Australia. No offense to our
New
New
Zealand market's on an all-time high. So I don't know if they don't know that. And I think it's done very, very well.
Yeah.
Very, very well.
So there definitely are opportunities. Now, to get back to your question about tech. So medium term, it's not going anywhere. Like if you find the right business, clearly tech is not a bad space to be in. In the shorter term, though, you're absolutely right. We saw that reopening rotation away from tech into value and cyclicals. Initially at the start of November when the COVID vaccine breakthroughs first occurred. It actually happened yesterday as well with the blue wave sweep. However, a lot of that reversed the very next day. So overnight, we saw the Dow underperformed the NASDAQ.
Because I've been looking at I just took a browse through some tech stocks today, and we haven't really been exposed ourselves to tech for quite a while here at KOSEC for the exact reason. But I looked at some of those stocks, Altium, Appen, with the exception of Afterpay Touch, Altium, Appen, YSEC. Wow, they look very sick. Those are not looking like those stocks that are going.
Yeah, on a technical basis, maybe not the best time to be trying to time a market entry, as we like to say to our clients. But I know, let's go on a little bit more positive note. I know you're a fan of Elon Musk. He just overnight, in the last 24 hours, became the officially richest man in the world.
I saw that. Tesla jumped 8 or 9%, did very, very well. 700% in the year. Is that right? 2020 was about 700%.
He accumulated, I believe, it was $150 billion worth of wealth in 12 months. The
And
fastest climb.
And how much of Tesla does he own?
20%.
Is that right, Caroline? 20%? Yeah. Wow. So he's doing very well. I remember seeing that in the paper a couple of days ago. I had a little bit of a laugh to myself because it was said, the announcement was, soon Musk might overtake Bezos as the richest guy in the world. And I said, I hope that happens. And everyone kind of looked at me and said, why? I said, I don't know. I just seem to like Musk better. I don't know why, but it just seems to be, he seems to be a much more nicer guy.
Is it because like rocket ships and electric vehicles are more exciting than online shopping too?
Yeah, he looks like a nice guy to work for, I think. nice kind of chilled out kind of a person. I don't know, he's probably not. He throws rocks at cars and stuff like that. Absolutely horrible.
I'm pretty sure he's not that chill, but I think that's part of the reason why he's been so successful is because he's always I didn't even mean to make this pun, but he's always driving for...
That's quite good.
Yeah, for higher and higher gains. So, yeah.
Absolutely. I think it's one of those things. I mean, Tesla was such an amazing stock. And I think a lot of the stocks, even Afterpay Touch. Okay, let's take Afterpay Touch for something. I mean, who remembers Afterpay Touch when it was $8, $4? Yeah. Caroline, what did it drop to in the global pandemic? It dropped down to
exactly. On that day itself, I remember us talking among ourselves.
Yeah,
the stock is so cheap right now.
About $8.90.
Yeah, $8.
Yeah,
and then now it's $100. If you'd bought it at $50, are you buying an expensive stock? Is that expensive? It's the same thing with something like Tesla. And I know a lot of clients say to us all the time. It's an expensive stock, $50, $100 or something like that. It just doesn't mean it can't keep going higher. And I think Tesla's a perfect example of that. What are your comments on that? Do you find that stocks that are in growth tend to get more expensive, like the CSLs, the Cochlears, the Afterpays, and they just stay more expensive? Is it okay to buy them?
Yeah, the actual number doesn't really matter. So actually, if you look at US stocks, generally they like to have their share prices relatively higher than ours. So we do have a few stocks that are over $100, but it's very routine in the US. So I think, I might have mixed this up, but I think Amazon is $3,000 and something, whereas Tesla is like $300 and something.
Yes, right.
And that doesn't mean it can't keep going.
Yeah.
Right. It actually is just a number.
Yeah, right.
In the end. So you can compare it to its past performance. You can look at a PE ratio. All of these things are very valid. But if you just come up with that actual number, it doesn't actually mean anything. If the company gets 10% more valuable, it'll either go, if it's trading at $1, it'll go to $1.10. If it's trading at $100, it'll go to 110. It's not going up by like 1 cent and 1 cent.
Yeah.
It's the percentage that matters.
Yeah. I think, ironically enough, everyone talks about the first thing people say is what's the price of a share? What's the price of a stock? Ironically enough, that's actually probably the least least, one of the smallest things that you should really look at. Would that be right?
Exactly. We have that top-down approach. We have all those different criteria. One of the criteria is not what is the dollar price of the share.
Yeah. So we would be looking at a stock that's maybe expensive, or maybe a lot of people might say expensive. Maybe that's like $70 or something like that. And we'd be saying, well, macroeconomically, it's not favorable there. Therefore, we're going to look at that and say that it's not a good buy right now based on that, not so much based on the actual price. Would that be a
exactly? So it really depends on what your definition of expensive is. If you just look at the number, you can't tell whether something's expensive or not. Now, if you were looking at, say, the big four banks, they have in Australia, they have very, very similar business models. So if, say, 3 of them had a PE ratio of 15 and one of them had a PE ratio of 25, then you could say that one is looking expensive. But it's because of the price relative to its earnings, not because of the dollar amount of its actual share.
Very good. Well, there we go. Well, that's the best and the worst performers on the ASX this week. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe average in? Why not send us a message and we can ask our panel? In the meantime, let's take a short break and we'll be back with the final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. The moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. Now we know what oil, gold, and the dollar's done. We know what the top performers for the week were. Now, let's take a look at what our panel thinks is going to do well in the week to come. Before I go any further, I thought I'd take an opportunity now, just 5 weeks or so of the last sort of 5 weeks, to have a look at how our stock picks actually went over the last 5 weeks. Because we do a big thing. You know, we come out here and we pick stocks and we say, these are ones that are looking quite good. Have they performed? Have we been on the money? If people have followed our advice and bought into these stocks, would they have done well? Caroline, I know you've done up a little bit of a summary of how that's all been going.
Yep. So top stock that has done really well for us, Nickel Mines Limited, ticker code NIC, producer of nickel pig iron. So we picked it on 27 November. It appeared on a podcast on 27 November last year at a price of $1.02. It is now trading close to $1.30, so that's a 25% increase.
And who picked that one?
Mr. Gabriel Ryan.
Thought it was Will. But okay, I'll give it to Gabe.
It definitely wasn't you.
Yeah, okay. All right, and who was and what? So that's brilliant. So what's the percentage gain on that?
25%.
And how long?
So 27 November to now about a month, slightly
A
more
month?
than a month.
Yeah. Okay. Wow. So 25% certainly gone in an upwards direction. What else did we pick, or what else did we look at?
Mr. Cow has a few picks that has done relatively.
Do you mean my dad or do you mean me?
Yeah. All right, so nickel mine's probably been one of the top performers. Okay. Well, let's go over to I think we'll go over to Mr. Cow, and you can have a quick chat with us about what ones that you've picked that have done well, or if you've been seeing anything that have done really well, and what your hot opportunity this week is.
With your permission, I'm going to reverse the order of that.
Okay.
I'm going to go with my opportunity, and I'm going to segue back into it, and hopefully you'll see the reason why.
Yeah, very, very artistic. Well
yes. So this is as artistic as I get. So the opportunity is BHP.
Okay.
And I don't think it needs much introduction for most people. It's largest mining company by market cap.
So you could say it's P for pretty big.
Yes.
That's not bad. That's bad.
Not do that again.
It's
Yeah.
Come on,
you got time.
Come on, I'm working on it. I'm working on it. It's BHP. It's a hard one to do a panel.
It is actually, yeah. I mean, I'll give you some time. There are 3 letters there,
Okay,
so pick one of the others maybe. But I mean, if we look at the actual composition of their revenues, so half of their revenues come from iron ore. That's at a 9-year high.
Yes.
A quarter of their revenues come from copper. Caroline mentioned that before. It's an almost 8-year high. Most of the rest comes from coal and petroleum. Now, petroleum obviously doing quite well. Peter's spoken extensively about it on today's podcast. So on a macroeconomic basis, doing quite well. Obviously, strong performance as well. Over the past 3 years, if we look at their compound annual growth, revenues almost 8%, earnings 15%. Fundamentally very sound. Now, major institutions also like them. So I'm just going to read all of these, but JP Morgan, Morgan Stanley, Macquarie, UBS, and Credit Suisse, all of them have a buy or an overweight or an outperform on it. And I think we have a chart as well. So just to round off our top-down strategy, you can see here it's returned to the upper Donchian channel. That Williams alligator uptrend is in effect, and it's clearly sustained that break above its 200-day moving average. So everything lines up very nicely. Now, this is where I segue back onto or into the past picks that I made. And now, I promise you this is not to brag. This is just to illustrate a point that we touched upon in the previous segment. Yes. So we just go backwards. 3 weeks ago, the one I mentioned was Accent Group AX1.
Yes.
4 weeks ago, it was Fortescue Metals, FMG. 5 weeks ago, it was Seven Group Holdings, SVW. Now, for each of those, we could have legitimately looked and said, they're on relative highs. Is this the right time to get into it? As you mentioned, it's a question that we get a lot from our clients.
Saying, a client rings up, or we talk to a client, or we talk to a potential client and say, why would you buy this? I know I get a lot of people emailing me and on the back of the show saying, I think one of the stocks you picked was Accent Group. And I got an email, I think, from a person that was viewing the show, and they said, I really like that stock, but it's on its all-time high. Like, why would we pick a stock on its all-time high?
Yeah, so I guess there's two aspects to this. Firstly, let's just go to the actual performance. So if we go backwards from that, since we mentioned those, Seven Group Holdings up 5%, Fortescue 10%, Accent Group 11%, and actually BHP, this isn't on tape, but you guys were in the investment meeting with me. I mentioned that actually a few days ago, and it's actually already up 5% since that.
Let's just get those numbers. So 5%, so Seven Group 5% in how long?
That would be a month.
A month roughly, or so, and Accent Group was 11% in...
that's like 3 weeks.
Wow, so that's 11% in 3 weeks.
I mean, that was aided by a very favourable trading update yesterday.
They've done that trading upgrade.
Sure.
But like you always said, it's better to be lucky.
Better to be lucky than good, yeah, exactly. But I mean, it was up less than 11%, but it was up before that trading update as well.
So done some very, very, very good ones that have gone into a positive direction. We're not going to talk we won't talk about Qantas.
Oh yeah, I thought we were just starting from December. Yeah, I mean Qantas, is one we don't get everything right. That's actually a very good illustration of that. But I mean Qantas is still looking relatively favourable now.
Oh, yeah, absolutely. Yeah. Like I mean, it's a bit hard, especially we've got the same vaccination coming out in February.
Exactly, but I think the point we wanted to make is that for things to go up, they hit a high and then they keep going. If things hit a high and just kept coming down, how would a stock ever go up? Like, there's really only one way for that to happen. So there's plenty of reasons we can object to each of those, and they're all very valid. But one of the less compelling arguments is it's on a high.
Okay, perfect. All right, going over to Mr. Casa. You've been looking at something that's got nothing to do with
contrary
P's
to
or H's or P's.
Popular belief, yes. I look outside of the energy space, away from oil sometimes. But my opportunity for the week, it's in the consumer discretionary space. So more predominantly in digital retail focus. So Kogan.com, I think, looks very promising.
Okay.
We obviously, thinking back to its performance last year, did very well, even taking into consideration the midst of the pandemic. So the performance is there in terms of that sort of environment macroeconomically. Reason being, obviously, dominates the digital retail space. As I said, very diversified product. Obviously, retail, they have Kogan Retail, Kogan Marketplace, insurance, travel, across the board, very good coverage. The whole premise of their model is discounts. So they don't have any brick and mortar retails, which with these restrictions coming in, I think is going to be very favourable for them because obviously they'll just have consistent, demand of their product and services. So I'm very optimistic again with Kogan. I think in terms of the valuations, UBS and Credit Suisse had upgrades. If we just want to refer to the charts, we can see that it did fall off a high of 25.50.
So that's about a 30% retracement, roughly?
Yes, give or take. Now,
that's recently.
Yeah, it was recently. It did go into a low of 15.50. Now, however, it has since then bounced off its exponential moving average 200-day with the level of support, risen 28% since then. It's currently hugging the top Donchian, which as we know, that's a great sign for obviously maintaining momentum as well as, opening alligator teeth. So it is looking promising, and it's something that I'm definitely going to keep my eye on.
Wow, keeping an eye on that one. Very, very good. I like both those picks, but I have saved the best for last, as always. The wonderful Caroline. What are you looking at this week, and is it going to be as good as Fortescue?
Definitely.
Definitely. That's a double definite?
Single.
Very good. It's single. Okay, perfect. What
My opportunity this week is Downer EDI Limited.
Yes.
It's ticker code DOW, sorry. It's a leading integrated service provider. Operates across 4 segments: transport, utilities, asset management, as well as facilities. The reason why I like down is a lot to do with the macroeconomic factors. So back in October 2020, the federal budget, the treasurer, correct, announced that it will be splurging 14 billion on infrastructure spending.
Right.
So that's where the space Downer operates in, and therefore I believe that it is a beneficiary of this initiative.
Wow, that's good. That's good. And everything's sort of running. That's good financials on the back end of that.
So in terms of financials, excluding the effects of the pandemic, stable, increasing revenues and cash flow as well as earnings. More importantly and more recently, they have divested their mining businesses as well as 70% of their laundries business. And these movements they fall in line with their objective of removing capital-intensive businesses to improve their balance sheet.
Very good. Have you got a chart? What's it looking like on the chart?
Yes, we do. So Morgan Stanley, Macquarie, UBS, Credit Suisse, they all like it. If you look at the charts, it broke out of its sideways trending pattern, now hitting its top Donchian channel. Both the stochastic and MACD are diverging, which shows and points to positive momentum in the short term.
And it's still quite a long way off its pre-COVID
Yes.
pandemic high. Okay, perfect. So we've got Downer EDI, we've got Kogan.com, okay, and we've got BHP. Ladies and gentlemen, thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend. And we look forward to seeing you on the next podcast. My name is Will Brownlee, and this has been the KOSEC Show.